Good evening, peoples. Let's jump in here on Roundhill weekly payers. The S&P 500, better known as XDTE, and the NASDAQ 100, QDTE. All right, so they just announced, so let's go over the key information. Let's jump right to this, and then I'll give you some data on pay dates. Again, a lot of you know this, some of you don't. So on QDTE, the S&P 500, they announced 26 cents, okay, down considerably. And that annualized yield, if you collected that 52 weeks, you would earn 25.9% on your money. Not bad. What is the price of QTE ending? $52.44. So that was up 6 cents over the previous declaration day, right? So every week they declare. So they declare on the 28th. The X date is on the 29th. So what does that mean? Again, for newbies, that means you have to buy it, right? They're announcing on the evening of 27 after the market closes. So you have the 28th to buy to receive this dividend. If you buy it on the 29th, you know, XDTE fund, you do not receive the weekly this week. If you hold it through next week on this same day, then you will receive it, right? And there's a schedule I'll show you on another sheet, but basically they replicate this every 7 days. So I pretty much can tell you, let's see where the schedule is here. Yeah, so the next declaration is 9/4, okay? So you have to, they're gonna declare, and then basically the evening of the 3rd, and then you have to buy it on the 4th, or sometimes they may declare in the morning. I don't have the calendar in front of me to see where Labor Day and things like that, but that's the typical methodology, right? You have a very short window. So in this case, in most cases, they declare on an evening, and you basically have to buy it the next day. On the 29th, X date, what does that mean? That means trades sans, right? Trades without the dividend. X dividend dates, what that means. And then the pay date. So you're going to get paid on the 30th, right? Which is Friday, last I looked. Let me just verify. Yep. Okay. So they declare on the evening late of the 27th, you must buy on the 28th, anytime on the 29th it no longer trades, right? With that dividend, and they pay you on the 30th. Repeat, rinse and repeat weekly. Now, is there any reason for it being down when we're going near highs? Hard to tell, but I have a few thoughts for you when I go back to the summary sheet. So let's scroll down, and you can see here, look at the payments. So it was 38, 38, 41, 35, 24. Okay, so back on the week of 7/24, it was lower. Even the week that started out 8/5 and 8/6, again, that didn't have too much of the payment in there. But there are clearly lower periods. Here's a 22, a 20, 11, a 16, a 13. Oh, that one's above. So you get interesting things. So this fund, which the inception date of all of their weekly payers was 3/7. So they waited, right, to build up money in the fund on having some dailies over the course of a few weeks, built up their treasuries to pay out. Well, notice something about the S&P, the XDTE. From inception, using that price, it's only dropped 10 cents over the entire time. And I'll show you in my summary sheet, right? So while the yield is lower than the NASDAQ 100, QDTE, the total return is good because they don't have any real NAV reduction. And don't forget that, guys. That's key in my opinion. I know there's people that just chase yield and say, yeah, but it's going to keep paying me. I don't care about NAV reduction. Well, I do because I care about total return. All right, so here's QDTE. What did it pay? 31 cents, okay? And 31 cents on a cheaper stock, right? It closed at the end of trading on 8/27 at 42.54. Now, in that case, let's compare. So this has had 3 consecutive weeks of being up, although it's only 6 cents, right? But if you look, it's a $52 stock, so when it pays 26 cents, the yield is much lower. Where do I get the yield? I simply go out and multiply that payment times 52 weeks and divide it by the current price. And so that's how you calculate yield, okay? So on this guy, it's down 6/10, right? You can see it right here, 60 cents, right? It was 43.14 last week when it announced, and now it's 42.54. And it has a trend of being down when we go over and look. So again, total return, in my opinion, becomes important. But you, the investor, has to decide. Maybe you own both, and you just say, hey, to me, the S&P 500 spreads your risk, obviously, over a lot more stocks. I know there's FOMO and AI and the NASDAQ 100, but it's also more volatile, right? And people will ask about RDTE, which is the new Russell 2000 weekly payer. Getting close, people. Remember, these funds can't officially, if you understand that, go out and look at my interview that I just did with the Granite shares with Will Ryan, who I had referred to as a Brit, well, United Kingdom. He's actually from Scotland. Very smart guy, very experienced ETF executive, right? And I've learned in interviews, when they can't tell you, they can't tell you as the official launch date. It's just the SEC frowns on that. When they get their approval and they then determine they're going to launch, they will send an email out saying, we're launching today. Anything else is kind of a leak, right? Oh, next Tuesday they're going to, that's what you call a leak. You whisper to your friend and he tells 5,000 people. But it's not official, and you won't find them officially saying we will launch next week on the 29th. It's really frowned on. Also in that interview, they leave their application giving them some options. One of the things that, and sorry if you guys want to just fast forward, I'm giving some education here, but it applies to many of these income funds. They are starting to, just like YieldMax is doing, they're starting to figure out that one method doesn't fit all, one size doesn't fit all. And so you have these high-yielding funds over at YieldMax on single stocks, and boy, when they're good, and when they're bad, they're not so good, right? And some of it is misexecution and active management from the fund managers. Some are the markets themselves. So it's really up to us as the consumer and the buyer to pick. I had a lot of questions from people to ask Will, like which is the best one for stability of NAV? Again, as a founder and a CEO, they can't really tell you that, right? They can say, well, my experience of watching, they can tell you which fund's the most popular, which one has the largest assets under management, but they can't give financial advice either, right? And it's very interesting. They give you all the tools in the toolbox, and I didn't want to say that, right? But that's the truth. Like if I'm oversubscribed and I'm in Misty, for instance, and my exposure to BTC is really high, but Misty doesn't have an inverse fund. And I can tell you, not all inverse funds work appropriately when the market goes down. You bought it because you're worried about what happens if MSTR goes down a lot. Well, if you can find a bearish, just, no income oriented fund and it's 2x bearish on MSTR, that's a good hedge. Just go buy some and say, hey, if I get killed in Misty and MSTR really goes down, then I want to own a hedge, right? Because it has a high IV, so trying to go out and buy options on MSTR, like buying puts, they're terribly expensive. It's hard to win in that scenario, okay? Your insurance premium is extremely high. So anyway, on QTTE, let's jump over and look at my summary. So, and then a couple comments down here. So here's XDTE, the S&P 500. Look at that. Only down 0.4%, basically 2 cents, right? Inception, again, I'm using inception. Your price is going to vary. What did you buy it at, right? But the dollar amount doesn't matter. It doesn't matter if I put $1 million in here or $1. The percentages all stay the same. And guys, I did fix that error that I had last week, and I told people in the comments. So here you are with only a 0.04, and so your gain or loss in dollars, right, is a minus 38 cents. But that is using my $1,000. But again, it's the same. This is the true loss. It's so minuscule, it's not even a loss, right? But so we look and we say, all right, it's paid $5.56 year to date. That adds up every distribution since March 7, okay? So what is that return? Well, that return is 10.61. This is only the dividend yield, okay? Well, what would the return be where I bought it versus what's the price at? Again, I had to pick a date. I picked the close at the inception date. It's negligible, but when I annualize it, the 4.04, because we're right around 174 days since we would have owned it. So basically that's double, 2.09, right? So it's like a 0.08. Again, it's negligible. So they, on an annualized, right, I take 10.61, and that's my return in the dividend portion, and I take the 174 days and I multiply that 2.09, and it says that I really have a dividend annualized return of 22.25%. And then I subtract the slight NAV reduction, and I end up with 22.17. So in my opinion, again, you look at it the way you want to look at it, this has a total return of 22.17%. Okay? Let's go to the one that jumps out at you and says, hey, it's cheaper, right? Current price is cheaper. I've collected more dividends. That guy's got to be the winner, all right? So what's the return? Well, it does have a 1/3 higher or 1/2 higher, depends on how you want to look at it, right? 10 is 2/3 of 15, but 15 is 150% of 10, okay? So same 174, so its annualized dividend is 32%. So same proportionate increase, right? But look over here, what is the stock trading at? 46.44. Again, your price can vary. I hope you bought it cheaper and you're ahead there. So you don't have the NAV erosion, right? So $7.27, but look here, 46.44, current price is 42.54. That's 8% loss on the NAV. And when you annualize that, you're at 1762. So when I subtract these, I'm showing that I'm ahead of the game. Again, total return, right? So let's look down here on some things that may affect, obviously. So if you're thinking about QDTE and you're super bullish, you think that NVIDIA is going to blow out earnings and the NASDAQ 100 over the next period of time is going to run pretty high, then you probably want to be in QDTE, okay, before NVIDIA announces. That's up to you. It's going to be volatile, all right? But that's a factor if you're considering these, all right? September, this is my opinion, and I owe my subscribers a video out here in the next day or two. September, likely, in my opinion, the research I do, the cycle followers that I follow, and a lot of other seasonality things say that September and October, we all know they're dangerous months. The biggest declines in the history of the markets have happened in September or October. I could go point to many, okay? Does that mean that it'll happen this year? Of course not. But I further have some cycle analysis that says the second week of September looks to be very much a pullback in the market. A black swan event, there's some liquidity pools that are pointing to that time frame on a global basis. Let's see, okay? You know, it's not a Nostradamus kind of, you know, hardcore prediction, but I have some confidence in this. So let's see. If I was a big investor and I had a lot of money in the market, I would want to have some protection. And if it's not the second week, then maybe it becomes the third week. If it's not September, it likely could be October. We need to pass through this time, you know, in order to continue up. It also happens to be an election cycle. And for those of you that follow rate cuts, we all know that the 18th is when the Fed announces, look, it's no surprise. The Fed's going to cut. The question becomes, is it 25 basis points or 50 basis points? They're clearly going to cut. I lean toward 50. But again, it's 50-50 on the outcome. When you have a rate cycle starting, 50% of the time, the market declines, and declines a lot during that rate cycle. Decline. Other times, and it's around 50%, it doesn't, okay? But time, the seasonality of September and October, some cycle work and forecasting that I follow, and the rate cuts, I feel like it will happen that way, and I think it'll be September. But again, let's see. Okay, guys, that's what I got for you. Sorry, and remember, you can always fast forward on these. I'm going to give you. This is the key data that I think you need to look at. All right, everybody, again, Bruce with Targeted Wealth Creation. I'm not a financial analyst, okay? This is not financial advice. It's for fun and entertainment. Hope you were entertained. Okay, peoples, bye for now.